Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're all having a great weekend. As always, next week is a huge week in the markets. We have FOMC next week, followed by second quarter US GDP the following day. Those events are going to dominate what happens in the market next week. And in today's video, I'm going to share with you what I expect from those events and how I expect those events to affect the markets next week. Okay, so a quick look at the economic calendar, and starting with what we saw last week, because this is important as well. We also had the EU interest rate decision, and that came out on Thursday. And for those of you who watched last Saturday's video, the plan for last week was risk on moves, on the assumption that we were likely to see a correction in the dollar. And if we go and have a look at the charts from last week, you can see from the 18th, which is when we started the week, we did have 1, 2, 3, 4, and we ended up 5 down days in the US dollar. And because of that, we did have into the ECB meeting a number of risk on setups playing out. For example, if we look at New Zealand yen, which we saw from the 18th, we had a big rally to the upside. And then when we had the ECB rate hike itself, we saw the market discount that news and sell off. If we have a look at CAD yen, which was another market we looked at last week, we had the rally into the ECB meeting, and then on the 21st we had the big sell-off as the market discounted the rate hike. And for those of you who have done the free GMT course, we do have a section in there about how the market acts as a discounting mechanism. And the reason we're looking at this morning is because when you have these interest rate decisions, the market reacts in a certain way, and I do expect to see similar behavior, although not exactly the same, leading into FOMC and into the GDP data next week. And we're going to cover that, as I said, in today's video. And the final important thing to note from last week were the PMIs on Friday. Out of France, Germany, the UK, and the US, we had contractionary recession readings in French manufacturing below 50, in German manufacturing and services, and we also had it in the services sector of the US coming out 47.0. These are very important. We don't cover them in the weekly Forex forecast purely because they're not very essential for short-term trading, but they are important pieces of data to keep an eye on. And last week, as I said, we had recessionary readings from a number of these PMIs. And in the US, don't forget, the services sector is the largest sector. So heading into this week, and this is where we start to put the pieces of the puzzle together, we do have FOMC on Wednesday and also advanced GDP on Thursday. These are likely to dominate the market behavior next week. And the markets, when we go through the markets, I'm going to show you what I think we're going to see, but they're unlikely to do much between Monday and Wednesday. And then we're probably going to start to see the moves from Wednesday or Thursday onwards. And I do believe that what comes out on Wednesday and Thursday could very well catalyze the next leg down in stocks, which would of course send the DXY higher. And I do think any of the next sell-offs in the stock market could actually result in capitulation, so a panic selling that we usually see at the bottom of bear markets. Bear markets don't usually turn, and we are in a bear market now in stocks. Bear markets don't usually turn without capitulation and without a strong sell-off where there's panic and fear, and then the markets tend to bottom. So there is a big risk that what comes out of FOMC next week, or if we get a second negative reading of GDP, and you might be looking and saying, well, why would we have a second negative quarter of GDP? Because yes, we had previously minus 1.6, but it's forecast here at 0.4. So we're being forecast here in the economic calendar that the US is just going to avoid a recession. Well, the problem with that is if we go to the Atlanta Fed GDP Now forecast, and this tracks and monitors GDP, gives a forecast of GDP essentially in real time, you can see the last estimate before this next print was minus 1.6. So the Atlanta Fed are telling you that the US has probably been in a recession for 6 months. And now we're getting services PMIs coming out telling you that sector is contracting. And I expect manufacturing PMIs to follow very, very soon. And so going back to the economic calendar, the chances are we actually see a miss here and we see a second negative reading of GDP, confirming the US in a technical recession. And if that is the case, I would expect risk off moves to come into the market. I would expect the Swiss franc, the US dollar, and also the Japanese yen to snap back in that scenario. And as I said, I do believe that either one of these events next week could catalyze the next big leg down in stocks. So a very, very important week coming up next week. Okay, so let's have a look at the scorecards heading into next week. And the first thing to note is that the scorecards in interest rate decision weeks have to be used in conjunction with what the general picture is around the interest rate decision, because this is why we look at them in the economic calendar. They have the ability to change trends, to completely reverse markets. And so you can go in with a probability score which can be completely changed on the event itself. So the interest rate decision and GDP data next week does take precedent. And because I believe there's a good chance of a second negative quarter of GDP based on what the Atlanta Fed is projecting, and we're going to see a miss, very likely, in GDP, which is going to surprise a number of market participants who are expecting, as you saw forecast in the economic calendar, for the US to just miss a recession. And if we get that second negative quarter of GDP, all of those people are going to scramble to get out. They're going to say, okay, we made a mistake. The US is already in a recession, and that is when you're likely to see a risk-off move coming into the markets. So starting from the top down, with my expectation of a risk-off move being the higher probability play and what I want to focus on next week, we can then go down to use the scorecards to allow us to drill down into exactly what risk-off setups we might want to look at. Okay, so in terms of setups and markets next week, if we do get a second negative reading of GDP out of the US, confirming not just that a recession is on the horizon for the US, but the US is in a recession right now, and because of that we see a risk-off move in the markets, I am going to favor the safe haven assets to the upside. That's the Swiss franc, the US dollar, and the Japanese yen. But here's where the scorecards help us, because yes, although the yen would outperform in a risk-off environment, I would prefer to be long the US dollar and the Swiss franc in that scenario, because they both have a better 1 month forward-looking probability score than the Japanese yen. So what this tells me is, yes, I want to be long risk-off currencies next week if we get that second negative print of GDP, but I don't want to be long the yen as it currently stands. There will come a time to be long the yen once again. I don't think now is that time, but it does mean at the very least I don't want to be short the yen. So I'm not going to be looking at franc yen, and I'm not going to be looking at US dollar yen, because then you're just trading multiple safe haven assets against each other. What I would like to do next week is reflect that bias of risk off in euro dollar to the downside, euro franc to the downside. Going to be looking at pound dollar to the downside, also pound franc to the downside, which we looked at last week and I'm in fact already short. And we're also going to be looking, because the New Zealand and the Canadian dollar are commodity currencies and they're only scoring bullish to neutral, they're kind of neutral. In a risk off scenario, I do think we see these two markets or currencies selling off, and so I am also going to be interested in New Zealand dollar to the downside. I'm going to be interested in New Zealand franc to the downside, and we can also look at US dollar CAD and CAD franc as well. The Australian dollar in a risk off scenario would also suffer. However, as you can currently see, the scorecards are just saying to wait on the Aussie. Perhaps that's a trade for next week, i.e. Aussie shorts. The final thing to note is that if the Atlanta Fed is wrong and the economists on the economic calendar are correct, which I think is unlikely, but if that is the case, then you are not going to see risk off moves in the market. If you in fact see the US avoiding a recession next week with a non-negative or positive, I say non-negative because it might just be 0%, it doesn't have to be positive, but if it doesn't show a contractionary reading next week, then you would likely see a relief rally in stocks, and also that would be reflected in the currency markets. You would see the safe haven assets like the franc, like the US dollar, and like the yen probably selling off instead of rallying, which is the base case that I'm going into next week with. So it's very important to bear that in mind next week. Okay, so let's have a look at the individual currencies here, and starting with the DXY as we always do on the daily chart to look at the bigger picture. The DXY is the only currency still in an overall bull market, and very similar to what was discussed earlier with stocks, if the stock market is likely to bottom, as is usually the case, with capitulation, panic selling, then that would be reflected the opposite in the dollar. This bull run in the dollar would come to an end with one final blow off top, and that's what you need to be looking out for. That's what I think, especially if we get a second negative quarter of GDP, I think that actually wouldn't be too far away. So we took out the previous target, the 108.73. I am now looking for the DXY to rally into new highs, and the 109.76 is the next key of resistance to the upside. Next is the euro. We're really just forming a bear flag here. This is actually a continuation pattern, and when you factor that in with what we've discussed with a potential risk-off move coming on a miss of GDP, second negative quarter, that would see the euro selling off. And we are still below the 1.06710, which is the multi-year breakout. The euro is not going to reverse into a bull market unless it can at least come back above that. So I am looking for further declines in the euro. The pound is lacking a little bit of momentum here, but again, that can all change next week if we get either. It doesn't have to be from the GDP, it could be from what happens on FOMC. So you've got those two events back to back. So either on FOMC or GDP, we could see a risk-off move coming, and I am looking for further declines in the pound. The Swiss franc is currently structured to the upside, but it's kind of choppy. If you were to look at this, although in the scorecards it has a probability score of 3, which is telling you to look to the upside, over and above even a number of the other currencies, technically it's still kind of just lacking a little bit of momentum. We could see a breakout to the upside. Usually the scorecards precede moves in the markets. So I am bullish on the Swiss franc, but it's not in a bull market as the DXY is. The Japanese yen, and this goes back to what I was saying when we looked at the scorecards, it is overall in a bear market. This tiny bounce to the upside, yes, it could be the start of a short covering rally, but I'm really only going to want to be buying yen if we start to see the market breaking back up, especially really if it can break above the 0.0079450. That would be the time to start looking at yen longs. So what if you miss the initial rally, if it comes back over in this area, not next week, because this is a daily chart, might take a couple of months to do this if it did. But if it does that, that would be the time to start looking to buy yen. So at the moment, really, I'm just avoiding yen shorts, but I don't want to be a buyer of yen just yet. Next is the CAD. The CAD is just grinding to the downside. We don't really have any momentum, but we do have lower lows and lower highs. So I am kind of bearish to neutral on the Canadian dollar based on what I'm seeing here, technically speaking. However, in the scorecards, it's bullish to neutral, so really just neutral on the CAD. This would sell off in a risk-off event next week, and that is why I'm going to be looking at, say, CAD franc to the downside as a market I'm interested in next week. Next is the Aussie. We just missed the target previously at the 0.6685 by just a pip or a couple of pips. And as it currently stands, I'm viewing this just as a correction. When we go through the charts themselves, you'll see what I think we're going to see next week is, just as we saw with the ECB, the market rallied into the ECB and then it reversed. I think we're likely to see the opposite. I think you're going to see some buying coming in from people who are expecting the US to skirt a recession. And then if we get that second negative quarter of GDP or on FOMC even, then I think what we're going to see is that's when you'll see the first risk-off move, and the opportunity will be to enter after the event. You don't have to jump in before the event and have this thing fly in your face, but after the event is where I'm going to primarily look to be positioning down for the next move to the 0.6685. And of course, that would be reflected in pretty much all of the currencies here. And finally, the New Zealand dollar. Again, this is really just in a bear market, and I'm viewing this as a near-term correction. Any continued pullback I am viewing as an opportunity on the either interest rate decision or the GDP data if we start to break out for shorts to the downside. Okay, so let's look at the markets themselves, starting with crude oil. I am bearish on crude oil. I've been bearish on crude oil pretty much since June the 30th when I tweeted out that crude oil had likely now topped and is starting to roll over. We are down over 10% since I tweeted that, and I am still bearish on crude oil next week. Any pullback in this market is simply viewed as an opportunity once again to look for bearish setups into the next key of support to the downside at the 89.32. The first Forex market we're looking at here is Euro franc, and of course we're looking at risk off moves reflected in the Swiss franc pairs. Euro franc and pound franc are my two favorite because they are the weakest in the scorecards in terms of a 1 month probability score. So Euro franc is my number one currency pair going into next week outside of the dollar pairs because they will be news trades. Any pullback in Euro franc is viewed as an opportunity to start to look for shorts into the 0.9775, and if we break through here onto the 0.9651. Next is pound franc. This was a market we were looking at to be short last week. I am already short this from last week and I'm holding over the weekend, looking for further declines into the 1.1496. If you're not already short from last week, any pullback in this area would be another opportunity to look for bearish breakouts into the 1.1496. And if we break through here, and this is one of the things I want to hold short pound franc for, is if we break through the 1.1496, I want to see if we come down here with speed, because there is nothing but air, as I mentioned in last week's video, between these levels. And when you have such a big air pocket like this, almost, the market can cover this ground in a very short period of time. So I'm looking for further declines. Pound franc is one of my top currency pairs heading into next week. Next is CAD franc. CAD franc has some really nice momentum, so I like this chart going into next week. Possibly even could put this in gold, but any pullback in this market is simply viewed as an opportunity to look for shorts into the 0.7364. Next is New Zealand franc, and again, you could probably put this in gold alongside euro and pound. They're only highlighted in gold, again, as I said, because they are the weakest in the probability scores. But the CAD and the New Zealand are likely to sell off, especially in a risk-off event. These two actually might outperform the top two. So I am interested in looking at these as well. You can see here, we're breaking out of a big bear flag. Really big sell-off, and it requires a longer correction or pause. And if we start to break down, especially if we can come down with momentum like this, any pullback is simply viewed as an opportunity to look for further declines into the 0.5798. Next is euro dollar, way below the multi-year breakout of the 1.06359. And this thing has pulled back towards it and just started to sell off. And now we've got this big bear flag. What I'm looking for next week is look for price to run up into FOMC GDP. And on one of these events, I'm looking for the market to then sell off like this. And that will provide the opportunity to look for short setups into the 0.9927. As I said, if the Atlanta Fed is wrong and we do not get a second negative quarter of GDP, I would expect a relief rally, and we may even come back and test the 1.06359. So if you want to be extra cautious, you don't want this to fly in your face and find out actually the Atlanta Fed GDP, as unlikely as it is, turns out to be wrong, then the best thing to do is to wait till after the event. Between Monday and Wednesday, the markets are unlikely to do very much anyway, so you're not, in all probability, going to be missing out on much. So that's what I'm looking for in euro dollar, and this will be the number one pair that I'm going to go to once we get those events on, first of all, Wednesday and then on Thursday. I would suggest when you are, or if you are trading these markets, to take wider stops, because next week is likely to be volatile. Next is pound dollar. Really didn't do much last week because the dollar just corrected. But again, what we're looking at here, and you might say, oh, okay, but we have an inverse head and shoulders here, which is a reversal pattern. That's great, but inverse head and shoulders are better in uptrends because then you can continue the trend. This is essentially trying to pick the bottom, and what I suspect is going to happen is this is going to come in, suck in buyers, and then if we get that second negative quarter of GDP, or on the hike itself, because don't forget, we're going to see a hike of, I would imagine, 75 basis points next week. That's when I expect to see the risk-off move take place, and that would be your opportunity post-event to look for further declines into the 1.1715. New Zealand dollar market is correcting and unlikely to do anything between Monday and Wednesday. I imagine this is probably just going to continue to correct, and then again on Wednesday or Thursday, depending what happens on Wednesday. If nothing much happens on Wednesday, it would be Thursday. But I'm looking for a big sell-off like this, for this trend to continue. And when we get that catalyst, that initial catalyst, I'm going to be looking for any pullback in this area for further declines down to the 0.6015. And the final risk-off setup that I'm looking at in terms of the dollar pairs in this case is US dollar CAD. If we get a sell-off in crude oil on a risk-off move, you're going to see dollar CAD rallying to the upside. I wouldn't be surprised to see the market come down, perhaps, and bounce off the low at the beginning of the week, Monday, Tuesday, Wednesday, and then get a breakout like this from Wednesday or Thursday. That would be the opportunity to look for long positions. I'm going to be looking back up to the previous high and the previous resistance, the 1.3203. So those are the markets that I'm going to be looking at in Forex next week. They are all risk-off setups, and they are all based around the Atlanta Fed being correct and us getting a second negative quarter of GDP. But just bear in mind, the actual catalyst might come on FOMC the night before. Okay, so wrapping up with gold, silver, and Bitcoin, starting with the gold-silver ratio, you can see the gold-silver ratio is still moving to the upside. The 95 handle is the next key of resistance. Last week, gold, for the first time in a while, did actually slightly underperform silver because we had a bit of a sell-off. But, you know, if you get gold underperforming silver 1 week out of 8, then of course you still want to be overweight on silver shorts rather than gold. So I am bearish on both gold and silver, but I still favor silver shorts over gold shorts, but I'm bearish on both. Next is gold. Last week I was looking further declines in gold, and look at where gold turns, 1682.30, almost to the point, and that was the reversal short covering rally as profit taking came in gold. Going into this week, if we're going to get risk off moves, this is going to see further declines in gold. We came up here with momentum, which tells me we're probably going to do this Monday into Wednesday, and then I'm going to be looking for the breakdown as we get, if we get a risk off move, you see the dollar rallying, this is going to push gold further to the downside, and that would be the opportunity to start to look for shorts down to the 1633.70. Someone was asking me, do I think gold has bottomed? I do not think gold has bottomed, and until we start to see the dollar topping out, and that's likely to come probably after a capitulation and a blow off top in the dollar, most likely, then I think you're going to see gold bottom. And when the Fed starts to print money once again, as it will inevitably do, that is when you'll probably see the bottom in gold, and you're going to see a very strong rally in gold and the dollar roll over. That is not now. I think between now and then, we still have a final capitulation. Next is silver. Last week I was looking for shorts in silver, and I did actually short silver up in this area on the pullback, and I am looking for further declines this week. We may just continue to correct going into FOMC. Any pullback is still viewed as an opportunity to look for shorts into the 17.63. Yes, gold actually underperformed silver last week. I think silver goes back to underperforming gold this week. And last but not least, we have Bitcoin. Again, what happens when you have a big move like this in the markets? The correction tends to be the same. You have a big correction. The market is not going to do a huge move, tiny correction, huge move, tiny correction. You have a big move, you have a bigger correction. I still view this just simply as a big bear flag. I am looking for Bitcoin to come up, and I wouldn't be surprised to see Bitcoin come up and double top into FOMC GDP, and then that would be the opportunity to look for shorts. If you want to be extra cautious after the event itself, say we sell off, we break the double top, and then we start to pull back, that would be the opportunity to look further declines down to the 16,492. Perhaps you get that Thursday, Friday, perhaps you only get that at the start of next week. It really depends on what happens this week with FOMC and GDP. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.